Hello, Big Trends traders. This is Price Headley with your weekly stock market outlook for this Monday. It's December 15th, 2025. We're going to look at the markets here, of course, look at the major news items hitting, and of course, markets pulling back a little bit after the recent run up. A little bit of an AI related pullback in some of the tech sectors that have had such a big run this year, maybe a little profit taking into year end. Also, some news about what was the former leader for the new Fed chair, Hassett, maybe kind of backing off to where maybe this Kevin Warsh is the now top chair candidate for taking over Jay Powell's job next spring. So we'll see how that plays out. Of course, the Fed did cut rates this past week, another quarter point. And of course, stocks as a result, you can see rallied a little bit, although still kind of bumping around the SPY, testing up into that 690 high. Everybody kind of thinking maybe we could get to that big round 700 number on the SPY. We got back into 689, and then you see I've now pulled back to what we call a retest on our percent R line, testing into this level. Our CCI line actually retested on the Friday low. So Friday low 679, right about today's low. We're holding 680. So that should be supportive. We've mentioned now the DMI line, it's going back to positive there at the end of November, was a plus. So even though we've kind of stalled it here in December, still overall relatively good, kind of a positive refreshes. The NASDAQ getting hit a little bit worse, tied to the AI related tech selling pressure. You can see that we'd mentioned last week how the NASDAQ kind of wasn't getting going through its key big trends band resistance, which is about the equivalent of this 80% level on the Williams percent R reading. So it's lagged a little bit. Now the DMI line's going to a net negative if we close under the Friday low of 611 and a third, which we're a hair under there right now. So they are lagging a little bit on the NASDAQ thanks to that tech little heaviness. In comparison, the Dow really leading. What a blast off it had this past week, all the way up through the last high. November 12th high was 484. We got all the way up to 490, almost 489.66 on Friday before settling back here late Friday and today towards this 484 level. So that does look like a relative leader. Our big trends band line is 483 and change, so pretty close to current levels. Looks like a good buy the dip in comparison. And then the the Russell 2000 was encouraging how the Russell had gotten through its last set of highs here. Up here, we had mentioned that kind of double top area around 252 to 253. You see we blasted on after we paused there, blasted on up last week to 258 on the heels of the Fed rate cut. And now here we are retesting 252. So again, another bullish retest right into our big trends bands, a level you'd like to see hold here around 252. Remember, old resistance often becomes new support after you break out above it, because anybody that was selling into it thinking it was going to hold is now at a loss, and they're happy to buy back closer to break even when we get the retracement. So should get some buying support here on the Russell, and would expect that you get a small cap end of year outperformance as it has lagged compared to the NASDAQ and the S&P, and oftentimes near the end of the year we'll see a boost tied to the Santa Claus rally and the small cap effect as we head into the end of the year and the first week of the new year, tending to have a positive small cap upside bias. Of course, volatility levels, the VIX, we mentioned how when they were above 20, we were a little concerned as we were staying over that 20 level back in mid-November, but just before Thanksgiving. We see it slashed underneath that 20 threshold all the way back down to 15 and sitting now back up around 17 or so. But bottom line is that's healthy to get volatility levels back into the teens. You see that's a little pause there where our DMI lines kind of suggest that that should be a relative low point about 14.85, right around that 15 level. So while volatility could have a little pop up, and that would imply a little pullback for the market, not expecting a big one, and keep that volatility in the teens underneath the 20 threshold, that's a bull market condition, kind of like what you saw after all the tariff fears last April where it spiked way too high. That was a tough time for the markets when volatility was rising above 20. As we got back underneath it by about mid-May, bull market conditions pretty much prevailed through the middle of October there into now November. So encouraged to see that. Of course, bonds not acting as well on the Fed rate cut, right? Fears of inflation as the Fed maybe is overcutting, maybe bowing to some political pressure And that's likely to be more the case with a new Fed chair even compared to our current chair. So bottom line is that that's not helping bonds on those inflation fears. And speaking of inflation fears, look at the GLD back up into the old highs, right near 400 on Friday's high. That was one close above 400 back there, October 20th, and then right harshly back below it to 376. So point being that this is a healthy little chart here where we're getting a nice little kind of curl and consolidation, nice little maybe cup and handle. For your cup and handle followers, you can see the cup, maybe the handle forming here, get through 400. That'd be very bullish for gold. But while gold's kind of maybe setting up for that, look at silver. SLV already has blasted off for the past month. You can see it went through its similar little pause for about right into Thanksgiving. What you see blew through there at the end of November and early December. One retest into our big trends band December 4th. Had one more pullback, little retest there on the low on Friday near 55 and popped right back up to 57.5 today. So you can see that's really acting much better. It's economically sensitive, which implies that the economy is not that bad. And so that's another good sign. But of course, the silver outperformance is quite notable as we've blown through. Really, that 48 level was about a high going back to 2011. And then you get back towards about 50. That was a high back in the 1980s. So this is a very important, perhaps longer term breakout that obviously keeps the metal still as a focus on the bull side as we look into 2026. Speaking of individual stocks, of course, Tesla had the news over the weekend that one of their vehicles was spotted down in Austin, Texas, doing a no safety driver ride. Of course, no other passenger ride, but basically a pure test of their automated self-driving system, automated robo taxi driving system. And you can see that's a nice blast to a new high through those last highs around 470 to 474. Today's high 481. We actually had bought calls on Tesla for our Tesla options traders into the Friday close near 459, managed to double them right off the gap up. As our system said, it was ready for a rally. We got it, and pleased to take those doubles down for Tesla options traders. Got a great special for Tesla options traders right now. Call our 800 Big Trends line or email us over to clientcare@bigtrends.com. We can help you take advantage of a phenomenal value to position you for all of 2026 and all of 2027 and potentially beyond with our Tesla options trader end of year special. But point being that you look at these major names, Tesla looking great. Meanwhile, NVIDIA, you see, has paused a little bit. That's obviously a big part of the Qs, the number one holding in the NASDAQ 100 QQQ. That's part of the reason the NASDAQ's lagging. But again, there's some other tech names like Apple that are holding up pretty well, finally pulling back today. But you see, it's been a relative champ. Oh, by the way, we mentioned the DMI tests, right? Look, that last DMI test was back here in October. We're getting one today on Apple. So this should be a key support level into today's low, probably tied in with the Thursday low right near 274, 273.5 today so far. So again, still a couple hours to go before the close, but this is looking like an interesting potential support area on Apple at today's lows. And of course, our lower big trends band is around 270 at kind of a worst case. So still like Apple relative to a lot of other techs. Of course, Oracle had earnings last week. Not such a great reaction. Gap down on the news. Remember, it did gap up on its prior earnings report. That was the high. What briefly made Larry Ellison the richest man in the world, surpassing Elon Musk for a little bit. But you can see it's come back down almost half from that high at 340. Today's low 181. Quite a turn of events in just 3 months. Of course, Oracle, another poster child of AI. And then another one that had earnings last week, Broadcom, ticker AVGO, also thumped hard today on the heels of the gap down on the earnings on Friday. It gapped open from having finished above 400, gapped open at 380. Now it's 341. So you see how fast the fortunes can change on some of these names on a day-to-day, week-to-week basis. Is it a broken stock yet? Not necessarily, though. That is going to be a close potentially below the 80-bar moving average in the light blue line. But again, longer-term support looks like it's down here in this 330 level. So we'll see what happens down there, sitting at 341 right now. Point being that we don't really love to buy dips on names that are getting bad reactions to earnings. You really want to find ones that are reacting better to earnings. And maybe we might be ready for some comebacks and some beaten down stocks. Watching like a name like a Salesforce.com CRM had a good earnings reaction. Unfortunately, not holding its 200-day average in yellow here. Has some more base building perhaps to do. So again, we watch them closely and see which ones are shaping up for some future leadership. So liking the metals, overall liking the broader markets, even as we see some rotation, but seeing maybe a value shift into away from maybe the higher growth areas that have had such a big run into names areas like the Dow, DIA, and the Russell 2000 IWM. Lots of ways to trade it as we head into the end of the year and position for what we think will be a generally positive 2026, especially if we get another Fed chair. It's going to be even easier money policy. So if you've got any questions, call us at 800-BIG-TRENDS or email us clientcare@bigtrends.com, including our Tesla options trader special. And have a great trading week ahead. I'll see you again at the beginning of next week. Trade well and stay well.